right, ladies and gentlemen, distinguished guests and esteemed speakers, welcome to the Moneycontrol Global Wealth Summit 2025 in Mumbai. The city's relentless energy makes it the perfect stage for gathering the brightest minds in markets, business, and policy. Now, to kick off this incredible journey, please welcome Nalin Mehta, Managing Editor Moneycontrol, to set the tone of the day.
India's rising global heft, its unparalleled opportunities for wealth creation, and the deep complexities that define the sinews of Bharat are now critical for global wealth creation as never before, for global wealth creation, for growth, and the future of money. Especially now, when we are seeing such seismic shifts in the global economic order and a breakdown of old certitudes that were once taken for granted. Wealth creation in India matters, not just for Indians, but for the rest of the world. Just 10 years ago, we were the world's 10th largest economy. We are now the world's 5th largest, having doubled in size in the last 10 years, and on track to becoming the 3rd largest. Just 10 years ago, our equity market was the world's 10th largest. We're now the world's 5th largest by market cap, having quadrupled in size. Just 10 years ago, we were doing less than 100 IPOs in a year. Last year, India saw the highest IPOs in the world, 327, and the second highest IPO proceeds of any country globally, $19.2 billion. That's more than double of China last year. But more than the size, it's also the culture and nature of wealth creation itself in Bharat that is shifting at a breakneck speed. With 185 million demat accounts at last count, compared to just 22 million in 2014, India's change is being driven by a new generation of investors. Almost half of assets under management in mutual funds now are from cities outside of the big 5 cities of India. And about 1/5 of these assets are coming from outside of the top 30 Indian cities. So how do global investors negotiate these breathtaking shifts in Bharat? What are the opportunities and the challenges of the Indian markets? What about new asset classes such as REITs and older ones like gold? What's the long-term view on India and what should investors do? Above all, how do markets and investors navigate today's complex and volatile world where things change minute by minute, social post by social post, and tweet by tweet? At Moneycontrol, it is our daily business to track these questions. With 100 million unique users a month and over 1 million paying subscribers, we are India's largest digital financial news platform.
The brutal market reset is underway, sort of stalling corporate earnings, steep valuations, and a cyclical downturn that has all triggered a sharp sell-off. Now, do you chase the battered blue chips, scoop up the shaken small caps, or sort of ride the next wave of momentum? The game has changed, and we need to learn how to pick winners and thrive in 2025. So how do you really do that?
Because since you head the wealth management business, a lot of money in the market has come from family offices. A lot of money has come from corporate treasuries. A lot of money has come from CEOs, some of them perhaps sitting here and investing in the market. What is your sense? Is this money still here? Is this going to be sticky money, or is this going to be, saying, oh, maybe this is not for us. Let's just take our money somewhere else.
So the segments that you mentioned, Anuj, I feel that clearly is sticky long-term money. And I'll tell you the reason also, what you started off asking Lakshmi and Vikas, that is it a time to start selling lock, stock, barrel and move out? This is typically an investor psyche problem. There's a Morgan Housel session after this where he's talking about psychology of money, and I'm sure he's going to talk about this. Because when the markets are in a phase like this, which is a bear phase, people start thinking on whether this is the right time to exit, should I sit on cash? And when the markets are in the very euphoric stage, everybody's talking about adding more money and entering the market. What we need to realize is that valuation is not the only factor that determines if it's a right investment to make. There are so many other investments. For example, valuation in Indian markets have never been cheap. Very, very few cycles you've seen where valuation has come cheap. There are a whole lot of other factors like liquidity, for example. Post-COVID, there was so much of liquidity. Nobody really cared about valuations, right? Similarly, there are various other factors which need to be taken into account when you're putting your money out. And India is never going to be really a cheap market. The current, correction, which is largely led by lack of liquidity. There's a liquidity deficit. Earnings have been muted. Earnings have been, dramatically lower than what it looked like it would be a year back. So it's a good correction. It's a good time for the market to resort back to reasonable valuations. And I'll conclude with a quote by one of the very famous authors, stating that anything that is fundamentally great but having a temporary problem to be fixed is a great investment to make. And that to me defines India at this point in time. Fundamentally great, but facing headwinds at this point in time, which seem very temporary. So great investment opportunity. Anything that defines.
Because what about you? Do you agree? What's the theme that you are backing right now at IDFC?
Yeah. So one theme, Anuj, that I've been a trend rather, not a theme, is that and what Amit said. Everybody is looking. We have to make money off the market, right? And family offices and HNIs, rather any investor is looking for that alpha creation, alpha generation idea, right? And what we've seen in the last couple of years is that we've seen very expensive IPOs landing in the market, very expensive IPOs, right? Which means if you start investing in a company right from day one, you're starting at a very expensive valuation because IPOs have been very, very red hot, steamy valuations. So the trend that I notice is that a lot of interest is now moving to pre-IPO, moving to unlisted private equity space, because we feel that by the time the company is ready for a valuation, it is so expensive that I need to look at an opportunity to probably enter into that investment before that. And last year was great for IPOs because at least the early part of the year was great for IPOs because markets were buoyant. Typically in years where markets are expected to be muted, where we are not expecting very, very expensive valuations, you will not see, and I heard one of the panel discussions in the morning where somebody said that we will have 60 to 70% lower number of IPOs as compared to last 2 years average, right? That will lead a lot of activity in the private equity space. And that increased activity in private equity space, I feel, is going to generate a lot of demand and interest of the investor community to look at private equity space very, very actively because they feel that the valuations, would be far, far attractive, before, let's say 2 years ahead of, if you expect an IPO to happen in 2027, this is a great year to probably catch some of those trends to kind of, so that one trend I feel is emerging very last 2 years, but I think 2025 is going to be all about that.
India stands at the cusp of an unprecedented leap today. A $10 trillion stock market, but achieving this milestone requires more than just momentum. It demands sustained 9% GDP growth and strong valuations. Can public investment boost growth while maintaining fiscal discipline? Will job creation ignite domestic consumption? How can exports expand amid protectionist trends? Do Indian corporates have the capacity to raise, absorb, and deploy capital efficiently? The stakes are high and the opportunities are immense.
First, start off with Anish. Under his leadership, the M&M group and M&M as a company has achieved tremendous. Their market cap has grown dramatically over the last 4.5 years, maybe in a fall in recent times. But given the extent of gains in market cap, given how the share price is done, particularly of the flagship, it's going to get harder from now on, isn't it?
Bodhi, in many ways, I'd say if the foundation is strong, then future growth becomes easier. And we've had a very strong foundation. In fact, I often remind folks that M&M was the best performing stock in the Nifty from 2002 to 2018. And after that, we've grown significantly since then as well. So I think we should, in some ways, we feel very confident about the DNA of our group, the ability for us to be able to deliver growth. And as we've always said, our results will speak for themselves.
But what are the strategic initiatives that you have in mind in terms of driving growth, which eventually, hopefully, will show up in a higher stock price over the medium term?
I think that's a fundamental question, Bodhi. And we start with the fact that we want each of our businesses to operate at a very high level. We use the term operational excellence internally a lot. What that means is that we are delivering the best products to our customers. We are delivering that in a manner that creates the best customer experience, in a manner that has the highest level of productivity. And that enables us to grow market share, that enables us to have better margins and create leadership in multiple industries that we are in. And that is what has driven our growth. And each business has a set of strategic initiatives, which I won't go into right now, just in the interest of time.
Neelkant, if I can bring you in. The economic survey, I think it was not this one, the 2024 economic survey, expressed some concern over financialization of the economy. You also have some views about what is a healthy market cap to GDP ratio. Why don't you talk us as to, are we now at a healthy level given the fall? What is a healthy market cap to GDP ratio?
I don't think there is a healthy market cap to GDP ratio that you can prescribe at all times. Markets are going to be trading in ranges. As you think about the market cap to GDP ratio, divided into two parts. What is the corporate profit to GDP ratio? And then what multiple you want to apply to that. For a long time, I would say from between 2010-12 to 2021-22, the profit share of GDP was falling. So, and therefore, Nifty earnings were growing at 4%, actually till 2019, and then GDP was growing, of course, at 11-12%. So, I don't think in the next 5-6 years, profits will grow slower than nominal GDP. So that should be supportive of a higher market cap to GDP. This is one of the reasons why even in the US, the market cap to GDP ratio is very high. In China, it's very low because corporate profitability or the corporate profit share of GDP is low. Then it comes to the multiples. Now, the multiples by definition will be volatile. So you will see them getting affected by cost of capital, what is the risk-free rate, what are the alternatives available, and general euphoria and pessimism. And I think we are coming off of a very high level. We were at a record high. We've never seen those levels. The range that if you plot 2004 to maybe 2020 or so was 60 to 80%. We were at 120. So we are now maybe down to about 100%. Can it fall another 10% from here? Perhaps yes. Will that happen because nominal GDP grows and market cap stays the same? I think that's the most likely scenario.
Now, as we move on, let's talk a little bit more about the markets. India stands apart from other emerging economies, boasting unparalleled diversity in its business. There are more than 500 listed billion-dollar firms. And as we gaze into the future of a $10 trillion market, where will be the next stock market titans emerging from? How do we maneuver current valuation dynamics to uncover the next big compounders?
The other implication, though, I mean, directly, what impact tariffs, etc., is a different thing. But as you said, though, is the world doing better? Many parts of the world are now starting to look like they're doing better. Europe, for example, is a case in point. Germany, after I think decades, is now starting to say they want to do well. They want to spend on infrastructure, military. China, this DeepSeek thing is. I mean, so the last 4-5 years in emerging markets, we used to say, Tina, there is no alternative. That seems to be changing. There are options. Argentina, for God's sake. Japan, I mean, not an emerging market economy, but I don't know if Rashi, Prashant, or Utpal, you have any strong views on this. I mean, and then we'll get down to what you like and where to find those ideas. Please.
So, I mean, I think all four of us here are India specialists, so to speak. Yeah, I think you're right. The world's getting to be a slightly better place. And maybe it should be. We've had 4 years of practically there being just US, Japan, and India being the stalwarts standing there for the equity capital markets, and it cannot be this narrow.
Right.
So I think it's healthy for global markets in general to have better alternatives where you have more choices.
Rashi, what is your big bet?
So, let's keep valuations aside for the time being. Let's look at where we're going to see better than what earnings we're expecting. And in Sunil's perfect world of the W-shaped kind of recovery that we see, we'll get the opportunity with the valuations. And, in terms of a trend that I'm picking up that is changing, and a shout out to Neelkant on the panel before who mentioned larger participation of women in the workforce. So 2019, the participation of females working was 23%. Last year, 2024, that was 37%. This year, we're supposed to get to over 41%. 2020, more women went to high school than men did. And therefore, as more women enter the labor force, consumption patterns are changing and changing dramatically. More women working, I mean, women have always managed household finances, but that's a very different kind of spend versus when they're earning themselves and spending on themselves. So when women earn themselves and what do they spend on, right? It's convenience to make life easier at home. And that could come in the form of, say, quick commerce or e-commerce, gadgets, electronic gadgets at home, because you need to have more time on your hands to be out. It's personal mobility, and we're seeing that probably with scooters, would get to smaller cars, etc. And it's also on the personal well-being. So whether it's fashion, whether it's beauty products, skincare, etc. And fashion and beauty are already a $110 billion market, of which beauty products is only $20 billion, which is expected to get to $90 billion by 2037. And $40 billion of this is supposed to come from the e-commerce platforms, right? So these are very large trends. And we have seen markets like South Korea or the US, what has happened when these trends have taken place, which are now taking force in India. To me, these are large changes, and we will find a lot of winners coming out of this space. Obviously, you have to look at valuations, you have to look at what the status is, what the growth status is. But yes, I think this is one opportunity which I do believe is playing out as we speak.
Specifically, you're saying beauty as a category is something to watch out for, right?
BPC,
products,
because
BPC,
I think it's fairly under-penetrated even today. Fashion, see, if of 110 billion, 90 billion is already fashion.
Yeah.
BPC is to go from 20 billion today in 2025 to 90 billion by 2037. So that's
Are there enough listed entities? I mean, everybody, all the large guys have it, but I mean, for them, it doesn't move the needle. So you need something concentrated in that sense.
So absolutely, and I think the large guys are realizing they didn't have exactly what was needed. They were sitting on their old, brands and working off that, and now are starting to look at more on the private space to acquire. There are obviously some listed brands which do more distribution. There are some that are getting into the manufacturing side of things, and I think we're going to see more and more come out as we go ahead.
What does Donald Trump's second term mean for the crypto market's future? The Trump trade, as they were, has already sparked a surge in the crypto prices. But the burning question remains, does it have legs to become a mainstay asset class, or will it be relegated to a speculative bubble?
See, Sumit, this notion that it is illegal, it is frowned upon, also comes from what we've seen happen in India in the last couple of years, right? If you look at it from a taxation point of view, 30% plus 1% TDS. The government is not a fan of crypto, neither is the RBI. And you also had this whole WazirX hack in the last year, due to which many people lost money. So how does one really rebuild trust? You're talking about making this a mainstream investment, but how does one really rebuild trust for people to even look at crypto?
Yeah, I think that's a very important point and an issue that needs to be addressed. And I can very well imagine why, I was sensing the room, almost one third of the people have invested, one third have not, and one third are not even planning to.
And one third also think it's illegal.
Yeah, one third also thinks it's illegal. So I think there is a lot of misconceptions around it, obviously. And in my opinion, the most, the only way I've figured out so far, and that's something that I think about it day in and day out, right, is just awareness and education. When I talk to people on the ground, like 7 years back, there were discussions where people were like, oh, if I have crypto in my wallet, I'll be put behind bars, right? There were also discussions like that, but the world is moving very fast. One thing that...
But did you see this income tax notification or that circular a few days ago? That they are now going to scan your WhatsApp
Yeah, I
chats
saw
and
that. Yeah.
emails for
Yeah.
illegal
So pay
crypto.
tax, there's no problem. If you are paying 1% TDS, 30% tax, then what is the problem in buying Bitcoin, right? So at least there is no confusion now. So 3-4 years back, if you ask someone, there was no clarity in terms of like, how do I pay taxes on crypto? Just because it is not clearly explicitly mentioned, that doesn't mean there's no tax on crypto. But now at least there is. There is mention of crypto in your, you can declare that in your income tax returns. All of this is there. So it gives, there's enough and lot of certainty out there. If someone is an investor in crypto, I agree the taxation is high, right? But the industry is also new, right? I hope that it will sort of get more rationalized in the coming future. But see, I have studied this industry for almost 8 years now. And I feel, and the more I read it, I was a skeptical at once. There was, the so-called crypto president was a skeptical in 2019. If you see, the technology is moving really fast. One thing that we cannot deny that the world 10 years back and the world now is very different. Things are moving digital. It's a digital asset class. And any investor should look at least having some understanding, like if not investment, understanding of how it works, why people value it. And then if it makes sense, have a small portfolio exposure to Bitcoin, if not all the 100 crypto, because not all of them are good, by the way. It's like, there are some blue chip stocks, similarly, there are some blue chip cryptos. And I think it makes sense. I think taxation, all of that matters when you start thinking of it as like, I'll put like 50% of my investment there. I think 0.5%, 1% doesn't make a difference, but this thing is getting real. It was a fringe experiment 5 years back, 10 years back, done by a few tech geeks and hobbies, but now it's getting real. It's getting treated as a serious asset class, and that's the reason why we are all invited here.